as I said, everything got a catch. You know what? There's a catch number two. So let's look at the catch by analyzing what's inside itemizing deduction and some of the thing that may, you know, if you are the legislator, you can sort of see, oh, there is a thing that I can cap, there's a thing I can say, oh, you can't do. Yeah, that's where the catch is. Just look at here. Itemizing deduction, we can medical expenses, state and local income or sales taxes, property taxes, charity donation, and all that. You know what? The first catch is if you add everything up and it's less than the standard deduction, you shouldn't choose it, okay? Of course you can, but as a rational human being, you shouldn't choose it. The second thing is something like this, because if you look at here, let me just get rid of all this. Look at here, we got states and local income or sales taxes, okay? So yeah, if you are like as old as me, you will know that before there is like an area this tax year before the 2018, and there is like a no cap, no limit, okay, which is good. So basically you can add tons of like state and local taxes to here as the deduction, because you say, hey, I already paid a lot of the taxes, okay, so it's kind of unfair for me to to pay the tax again, so you should like deduct all the amounts. That's the basic, that's the fundamental knowledge the reason behind this. But here's the thing, there's an act called the Tax Cut and Jobs Act, acronym for TCJA. Let me just explain this, okay? TCJA. And so under this cap, and so if you are like paying state and local tax, let me make myself a little bit smaller, so I don't want to obstruct everything. Okay, so basically under this Tax Cut and Jobs Act, let me just write this down. Tax Cut and Job Act. So under this act, hopefully I already write this down. So during the year 2018, all the way through 2025. Remember the word through 2025. So yeah, 2025 is like a cutting point. So 2018, including 2025, all here, all this time in between, there is a SALT cap. Okay, SALT is like a state and local tax deduction. I know it's a kind of cheeky to make it like a SALT. It's kind of salty. Yeah, if you think about it, it's sort of limiting the deduction. So yeah, I feel hurt. So SALT cap. And so before, you can do whatever you want. If you pay more in a state or local tax level, you know what, you can deduct it. But starting in 2018 through 2025, there is a cap called SALT cap that is $10,000 maximum. Okay, that's the cap. But here is a silver lining here. So it's just at the end of 2025. Okay, but after, I don't know. Okay, because as I'm recording this, the by the way, the IRS doesn't legislate the specific like laws, regulations, expirations. It's the Congress, right? It's the Congress that does this like legislate expirations, and it should expire after 2026. Okay, but yeah, maybe it will like extend. I'm not sure because it's never happened when I record this video. Okay, but hopefully after the tax year 2026, starting tax year 2026. Sorry, this is like a cutting point very sensitive area here. So starting at a tax year 2026, hopefully, if there's like no salt cap, you should be able to may again, okay, deduct all eligible or the salt payments, right? Of course, I don't want to overcomplicate the issue because that's where professional like us come in, because they are subject to other limitations. It's just like no salt cap limitations, but like other limitations like MT limitation and all that. But you just need to know there's another catch. Okay? Hope that helps.